let's go across to our special segment. This is the big story for today. The spotlight has to be on the rally that we have been seeing in the IT companies. Reema, first, just tell us about the two important notes that have come in from Investec and JPMorgan. What are they saying?
Well, let me start with Investec, which says that basically the risk reward for IT has improved. Now, earlier IT companies, you saw limited return from here on, given the valuations and growth prospect. Now they're saying that, IT companies are offering a 10 to 15% one-year return profile. They have upgraded Infosys to a buy from a hold. Target price is 1655. They also like Tech Mahindra, TCS, and in the mid-cap space, they like Mphasis, Zensar, and KPIT. So that's reason number one. Investec sees an improved risk-reward profile. From here on, if you buy IT companies, you can get a 10 to 15% share price return over the last 1 year, and Infi is an upgrade. But what's boosting TCS is the JPMorgan note, where they've upgraded it to an overweight. Target price is 3,800. They talk about the underperformance. In 2025, TCS has underperformed the Nifty by 29%. Right? It's underperformed the Nifty IT index also. And now they believe growth expectations have bottomed out and any recovery will boost TCS. Also, valuations are 2 standard deviations below the 5-year average. The 5-year average for TCS would be 24 times, roughly. Now TCS is trading at sub 20 times, right? So there is that valuation comfort. And plus, when you throw in the dividend yield, free cash flow, according to JPMorgan, TCS is looking attractive. So Investec, Infi upgrades, TCS, JPMorgan upgrades.
All right. But can we say positioning in IT is favorable now?
There was this interesting note by Phillip Capital, and we've been talking about how IT has been completely out of favor post that, after the post-COVID digitization boom where IT stocks ran up. So there was this Phillip Capital, and it's a sales note, not a research note, where they're saying the FIs have been selling IT. We've seen outflows of $4.1 billion since March of 2024, and the assets under custody by the FIs in IT has fallen from 10.3% to 7.4%. Even domestic ownership in Indian IT is at an all-time low, approximately 8%. So basically, in a nutshell, that people have shunned IT in the last, 1.5 to 2 years. And therefore, there is a case that you would look, if there is some portfolio rebalancing, IT could see an increase in weightage.
All right. So what about the mid-cap IT names? We saw that upgrade coming in for large caps. What about mid-caps?
Well, just some notes. First, back to that Investec note. They like Mphasis. They see this company can give a double-digit growth, and Mphasis benefits from any potential Fed rate cut. So when that comes through, if and when, say in September or onwards, it could provide a boost to the company's top line. The second one is KPIT Tech. That's also doing very well. Here, Investec also likes KPIT Tech, but even Motilal Oswal likes KPIT Tech, and they're talking about this company's top line. Motilal Oswal talks about KPIT's top line hitting $1 billion by FY28. So it's growing very rapidly, 15% revenue CAGR. We're talking about large caps growing in mid-single digits, low single digits. 15% revenue CAGR is what they see for KPIT Tech with some margin expansion. And in Zensar, also Investec likes the company. Target price is at 920. But I just want to add in a Kotak note, which I just saw some time back. They've basically analyzed, again, the whole generative AI, and they've identified winners and losers from this AI transition, right? So they're saying quality challengers. By basically challengers, you're talking about the mid-caps. They're challenging the incumbents, the larger legacy players, have an edge. So the mid-caps who are better placed include Persistent, Coforge, Hexaware. They're beneficiaries of generative AI disruption. In the large cap space, HCL Tech benefits, while Tech Mahindra could be impacted.
All right. So that's a roundup on the IT space. Thank you so much, Reema, for explaining that to us.